Trading US30. Trading US30 is the easiest strategy that I have. It's even easier than London session, US session, any session. US30, there's a few simple rules to go by. We trade it completely different to the US session or London session, Asia session. Now, these rules are, as you can see on screen, only trade from the previous US session. No other session. We are only trading from yesterday's session. That's it. We don't look at anything else. When we're marking out these zones, all we do, top of the body, top of the wick, mark it out, and then bottom of the body, bottom of the wick, and we trade, as we can see on this diagram here. This is all we trade. If price is opens in the middle of the zone, we either wait for it to touch the top or the bottom. We wait for let's say it touches the bottom. We're going to wait for a 5-minute bullish engulfing candle, and then our TP would be at the top here. It would be the same if price pushed to the top. We'd wait for a bearish engulfing candle, and we'd take it down to the bottom. Now, if price opens outside of the zone, all we're going to do is wait for a touch back. Let's say it opens below the zone here. We're going to wait for a touch back into the zone, a 5-minute bearish engulfing to take it down. There is another opportunity that can happen as well. Let's say we come up here, get a little bit of reaction, and we push inside the zone. If we push inside the zone, then this rule then applies. Then we're waiting for a 5-minute bullish engulfing, and we're going to take it all the way to the top. The same obviously applies for if we open above the zone. We're just waiting for it to come down into the zone, wait for a 5-minute bullish engulfing candle to take it further to the upside. Or on the flip side, as we can see here, we wait for it. If we don't get a valid reaction and it comes into the zone, we're going to wait for a 5-minute bearish engulfing candle to take it all the way back to the bottom of the zone. I'm going to show you a few examples, so it's going to make more sense. However, it is a very simple concept once you can see it. Use the 5-minute entry. Of course, we only use a 30-minute time frame and a 5-minute time frame. We are simply just going to use the 5-minute for the entry. We want an engulfing candle. And that's literally it. That is it. So we're going to get into a few examples here. However, as you can see by my beautiful diagram at the bottom, this is basically what we're going to be looking for. We're going to give basically 4 different opportunities. And yeah, we're just going to go through them and we're going to get started. So if we look at a replay here, we can clearly see, what do? Well, as stated, we only mark the highs and lows of the previous US30 session. That's it. That is literally all you're marking out. And as you can see by the previous diagram, that all we're looking for is simple movements either to the top of the zone or the bottom of the zone, or vice versa. Let's say we push out of the zone, then we're still waiting for a retracement back in to the top of the zone to take it up higher. So let's just look straight into it now. So we have our zones here and we're simply going to trade it off each other. So if we play price on here, we can see price has opened in the zone. We've got this pullback, and we're going to wait for an engulfing candle here if we get one. We still haven't got one, still haven't got one, still haven't got one, still haven't got one. Now we're above the zone, so we want to wait for an engulfing candle above here. Boom, and we've got one. So now that we finally have our bullish 5-minute engulfing candle, all you do then is simply enter the trade. So if you put your stops here. Now, because these zones aren't structure points, right? These zones here are simply just highs and lows of a session. All you do is get the major 5-minute structure point and put your stop loss below that. For example, I would argue this is one of them. This is where multiple candles came into, held before pushing up. It would be the same here. And the same here. And these would be your structure points and potential points to put your stop loss. for this one, obviously I'm going to go with the closest one. Now, mind a few pips for spreads. Whenever you're in a trade, you want to put your stop loss a little bit lower, just so that spreads in your brokerage doesn't take you out. Because you could have a winning trade and it not actually hit your stop loss, but spreads take you out. It's the most annoying thing to experience when you're trading. So now we need to find a zone. What do you do to find zones? It's the exact same process if you were to find a zone trading US session. That's it. All you'd look for is a highs and lows of a session of a previous US session. That's it. Or a previous support zone or resistance zone, somewhere where price has tapped in so many times and respected. You can also use that as a take profit zone. So for this example, we're going to use a previous high, for example this one right here, and US30 is, extremely volatile. Like, it moves. When it moves, it moves. So you can have these exaggerated take profits. Again, make them make sense. For example, this is a top of a US high, so it makes sense to have it there. So therefore, that would be our target. So if we jump back down to the 5 minute here, and if we're just going to play price along a little bit, we see we drop, we come up to it, and look what happens as soon as we hit this zone above. Huge reaction, we start coming back down to the entry point. Yet again, when we come back to the entry point, we see this zone here. We see a huge reaction off this zone again. So the zones are valid and they do work for US30 as well. All you're doing is using the previous US30 session high and low. That's it. So in US session, when trading US30, you mark out yesterday's high and low, or Fridays if it's a Monday, and you just trade off that. And it's a very simple process. Your targets are previous US session highs and lows, just like if you were trading US session, as you can see on this example here. So it is one of the easiest trading processes, strategies there is for this one, for US30, and it does work and it is proven. So we're just going to get into another another example, and yeah, let's walk you through it. So the process repeats itself. Now this is one that a couple of students of mine have tried, and they like it. They like it the most just because it doesn't require basically any practice at all. The chart on the day, you mark out the high of the previous US session, you mark out the low of the previous US session, and then you sit and wait for a valid 5 minute candle reaction. So again, we're going to trade it. We've marked out the two zones we need, and feel free to, give this a test for yourself. So marked it out, got to tap back in. We've got to tap back into the zone and always wait for their tap back into the zone. If you don't get a tap into the zone, call it a day. It does not matter. Then all you have to do is place short position in this case. Your structure point would be this wick. Again, like I say, put it a little bit higher. And then your target would be the bottom of the session. Then all you do, play price on. And there we go. And it's as simple as that. So yes, we started above, but did we get a 5 minute bullish engulfing candle that would support our bias to the upside? No, we didn't. We melted through the zone. We came and tapped back up. Yes, ideally, this 5 minute bearish engulfing candle was a little too big. It ruins the risk to reward a little bit, but we can't control that. So we get in with what we've been given, and we can take a 1.38% win. And that is basically it. So you start in the zone, you wait for a tap in and a push up, or a tap in and a push down. You start outside the zone, you can wait for a tap in to the top for a push up, or you wait for a tap in to a push down, or you wait for it to push through, a tap back in to push back up. It's that simple. So again, we're going to go, because they're so quick, we can just go through multiple. So just to get the gist of things, I'm going to go through another one as well. And if we load up yet another example, you mark out the previous high and you mark out the previous low. You wait for US session to open and then you trade exactly what you see. So if we just play price forward here, we wait for a tap into any one of the zones. As we can see here, we broke below, now we're pushing back in. We never got a 5-minute engulfing rejection to the downside. So unfortunately, we're still sat here watching the chart. We're still watching stuff going on. Yes, we got a tap in here on this candle right here that my cursor's on, but we didn't get a 5-minute bullish engulfing to take us to the upside. So yeah, we're still waiting. We're waiting for that all-important signal to take us up. And if we press on here, it looks like price is pushing on without us. Now, I wouldn't be in this. Why would I not be in this? Because we never got the tap back in. We dived right through, we pushed back up, and if this bearish candle here tapped this zone, and then we started printing these candles, I would be in around here. But we didn't get a tap back in. And a lot of you might see that and be like, well, surely that counts anyway and you can get in. That's not my rules. That's not how I become profitable. You become profitable by following rules. You have set rules for a reason because you've tested something. This didn't tap in. I don't want to be in. Unless this then comes down again before 5 o'clock and gives me a valid print, then I will be in. Yes, of course. But we never got the tap in. So this could go all the way to the moon and I wouldn't be in it. Simply for the fact it's not in my plan. It's not in my plan. It didn't come back down. It didn't tap in. So what's the point? What's the point of getting in if I know I've tested something and I know it doesn't work? So therefore, I've not been in this, but let's just say we play it on. And we're past 5 o'clock anyway. However, you can see the course of direction. And if we just play it on a little bit further, yeah, there you go. So the two zones work. They play an important role to each other. Price reacts off of these zones. As you can see, we came down, held this zone, and pushed right back up to the other zone. It's unfortunate that it didn't come down and give us the valid reaction that we look for when it comes to entering a trade. However, you're not always going to get that. And this is a prime example of you wouldn't have got that, but it was a textbook play, and price pushed all the way to the top. So it's a shame it didn't happen. However, it was just one of those days, and you'd move on to the next one. Here we are with another example. Now, you guys should probably know what to do by now. It's the high of the session, and it is the low of the session. Now, I would definitely recommend forward testing this and back testing it. Just have fun with it, play around with it. But that's literally all you mark out. Then you enter the chart now, and you wait for US session to open. It's opened. We got our bearish. We're looking kind of to engulf this candle here. So if we can start engulfing these candles, that would be great. And we just wait ever so patiently for it to print. And there you go. Ignore me pressing too many times. However, this is our engulfing candle, as you can see. Unfortunately, it left a huge wick along with it. So, following the rules, we put our stop loss above the wick or below or above a structure point. This is the wick, so this is where the stop goes. Take profit. All we do is target the bottom of the zone. That's it. And then we'll let price play on, and there we have it. And that's it. Because price reacts to these previous US session high and low. And that's it. That is literally the strategy for US30. And it's definitely one of the favorites, because I think, for me personally, from the outside in, I can see how simple it is. So if I was new again, coming to this and coming to see this, I'd be like, wow. it seems so simple, and it is simple. It's a very simple concept. Just make sure when I go over the rules at the end of this course, just make sure you're following them, you don't break them, and you have your stops above the wicks or below or above the structure points, and you're not trying to get away with a really tight stop loss, and then you end up getting stopped out. And then you start blaming the strategy, and then you start flipping the strategy, and you go learn ICT Silver Bullet or whatever he's on about these days. So the strategy is simple and it works. So like I say, give it a try for yourself and let me know what you think. But I've been doing this strategy now for a year, and yeah, I've only got good things to say about it, really, just because simply how simple it is. And that's what I'm all about, if you haven't noticed already, is trying to make it as simple as possible. And it works. It just does work, guys. So yeah, if you do test this, let me know how you crack on. I am just going to go through one more, just to really get it in your head. But any questions, let me know. But yeah, let's go do another one. Now, it is extremely easy to find examples of this, just because how common it turns up in the market. So again, the rule, bottom of the body to bottom of the lowest wick, and then we're going to do the same up top, just like that. Nice big chunky zone. Then we're going to head to the 5 minute, and then we just wait for a potential entry. So there we have it. You saw this, we're waiting for an engulfing. We got our tap back into the zone, where we get an engulfing candle, patiently waiting. So this is an interesting one. We pushed up, we got a touch back in, but we never got our engulfing candle. So we got teased out once. We then pushed through the zone, we're waiting for a touch back in, that never happened. We came all the way to the bottom, and then we produced an engulfing candle pattern here. So therefore, we're going to see if it would be even a 1% risk reward. I don't believe it would be. Oh no, it would be. Okay. So it came to the bottom of the zone, and now we just play price on a little bit. And it would have been past the time anyway. So you would have closed out maybe 0.1%. But this is actually a perfect example of how the price reacts to these zones. We come up, we tap in, we respect it a little bit, we blow through it, then we respect the bottom of the previous session, we react from it, and then the time just drizzles out. But look where we get a reaction from. The top of the other zone. So it was an absolute roller coaster of a day, and I wouldn't actually like to be sitting through this day, but you can see how the price just respects these levels. We blew right through, tapped in, tapped in, tapped in, tapped in, blew right through, waiting for this pushback, never came. It hit the bottom, tapped in, tapped in, tapped in, pushed all the way to the top. As soon as it got to the top, reaction, and it started coming down again. So you could have, if you were very vigilant and you were absolutely on it all day, you would have been able to catch this. So it does throw a little bit of conundrums, and it shows you how important just waiting for that 5 minute engulfing candle is, and how important of a role that 5 minute candle plays as a part of this strategy. It is absolutely imperative that you have patience with them 5 minute candles. Otherwise, you're going to get caught out. As you can see, you would have got caught out numerous times. It's very important that you are patient with this, and please give it a try. Do let me know how you get on. Any questions, like I say, I'm active in the Discord. Just know I will get back to you in due time. Yeah, just like I say, a lot of people to respond to, and it's a lot of the same questions, but that's completely understandable. Considering, well, everyone's kind of getting into it again, everyone's kind of getting into trading again, and it's all a big learning curve. It's a huge learning curve, huge, and you have to stay persistent. But yeah, thank you very much, guys, for watching, and I will start making the next video.